What's going on, guys? In this video, we're going to go over how to identify supply and demand zones on a chart, starting with the daily time frame. I kind of want to introduce you guys to something new that I'm doing for Evolution traders. So what I'm offering for less than $1 a day, it actually comes down to $12 a month, is access to that live trading webinar each and every single day with me. You guys can get access to a chat channel in Discord, and you guys are going to get access to be able to communicate with me and the rest of the team, whether you want to chat through text or voice, right? Or if you just decide to listen in to the streams, you can definitely listen to the streams. It's less than $1 a day, $12. Again, guys, I have increased the price of the mentorship for the gold members. That price has doubled. I gave the opportunity to kind of get in for a last ditch effort last week. If you missed it, I'm sorry. But again, as my time is just as important as yours, I don't want to continue to take people in to do these mentorships and stretch myself thin. So again, the option is still there. The price has increased. However, if you just want to listen in, you can definitely do that by just joining the live trading webinars only, link in the description. So let's kind of get into, how to identify some of these supply and demand zones on any time frame. It's going to start with the daily chart, right? And we're going to use our eyes. We're going to start with a blank canvas. The only thing that's going to be on my charts is just going to be the 20 SMA. And what I'm going to allow my eyes to do is gravitate towards the high and low points on the daily time frame. So if I kind of look at the highs and start marking out some of these tops, and I start marking out some of these bottoms, you can see that resistance once before, acts as resistance again, support once before, acts as support again. And then what I'm going to go through and do is just kind of pick out these high and low points where we kind of touch these areas and have an immediate kind of reversal or a bounce. And then what I'm going to do is start working my way down to the smaller time frames. I'm going to go down to the hour and kind of see exactly where these levels are kind of correlating to, and then see if I need to adjust or add anything. I can see a lot of support in this area here on the 1 hour chart where there was no support on the daily. So again, we're going to have a little bit of a level here. We're going to have a little bit of resistance here. So again, also remember that previous levels of resistance are going to act as new forms of support, and previous levels of support are going to act as new levels of resistance once we break through those levels. Then from the hourly chart, I'm going to go over to the 15-minute, and I'm going to kind of see how this is matching up with what we got going on from the larger time frames. You can see we've got a little bit of a top here where we had some price action, kind of have some trouble there. We've got a little bit of a top here minus this wick. Then from there, I'm going to go down to my 5-minute time frame, which is what I like to use for scalping. And I'm going to zoom in on this time frame, and we're going to be able to see how these supply and demand zones are kind of playing out. So notice here coming into the day, where we have this area where we broke through this price of 15,942, came right up to this level that we had already marked at 16,000, and then notice the 16,059 level, and where we're doing a lot of this consolidation at, right? Again, guys, technical analysis is meant to help you. It's not meant to, keep you from making money, right? It's your emotions and your bias and your quick trigger finger or FOMO that is causing you to lose trades and lose money. It's not technical analysis. So notice how once we start to break through each one of these levels, we come up, test it, we back test these levels, we break through, we consolidate over, we push higher. Notice how we kind of are trending here. So the day's trend today is definitely bullish. We should be thinking more so on the long side of things. I really don't have a short position here until we start to lose 16,060. I could play that back down into probably this top here. So on the 5-minute time frame, I've got a little bit of support down here in the 16,030s. So again, if you get a little bit of a short position, you can probably play this down for 20 points, see what we do and what the reaction is here. Obviously, if we close below that level, we would look for a short position back down into 16,000, which would be a nice healthy back test. But if we don't and we hold this level and we push higher here, you can definitely use these areas as a stop loss. So let's say, for example, let's run a little situation through here, and let's kind of expand this chart so we can see just a little bit more. But for example, let's say that we do start to lose this 16,060 area. We close below it, and we take that short position into the 16,030s. Once we get to this area, we would take profits. Once we start to bounce and you get that green candle closing over a prior red candle, we can then go long because we've got room where? Back up into our previous area of support that is going to act as new resistance, and we can use whatever low, right, whatever low we had as our stop loss and just kind of let the trade work out, either until we get stopped out or we take profits. Now, again, if you're going to trade multiple contracts and you're going to get over this 1660, you can definitely play it into the highs. And what we're going to have to do now is kind of mark out these highs. I don't really like marking out the highs the first time that we test, as we could put in a new high here. So as this keeps putting in a new high, I'll have to keep adjusting this top level. But you can see how these zones start to formulate, right? You can see how these zones paired with a 20 SMA are going to kind of give you that reason to take the trade, right? So if we're trading over the 20 SMA and we're breaking through a level of supply, we want to be going long. If we break down below support and we're trading below the 20 SMA, we want to be trading short. So I'm not going to really look for a short position until we get below the 20 SMA. And once we're below the 20 SMA, I need to see us break one of these previous structure zones to then go short into the next area of demand. This is how you can start to trade supply and demand, and how you can start to mark out supply and demand on your charts to use it for your benefit. The only thing from here that you need to absolutely do is figure out the correct position sizing, meaning number of contracts that you want to trade that is going to keep you in the game, right? We don't want to put on one trade and potentially have our whole account blown because we're over leveraged. Again, this is about compounding small wins and managing the small losses in order for us to be profitable at the end of the month, quarter, and year. So again, if you guys like this video, make sure you like, comment, subscribe. If you guys want to trade with me, where I'm going over these kind of things in real time and trading with the rest of the team, that live trading webinar is less than $1 a day. It comes out to $12 a month. Again, if you're a little bit more serious and want the full access and want that private one-on-one mentorship, that link is also down in the description box below, and I will see you guys all in the next video.